Hi, and welcome back, everyone. My name is Michael LeBlanc, Senior Portfolio Manager at Canaccord Genuity Wealth Management and partner at LLC Private Wealth. Thanks for joining us for our weekly update and take a look at our tactic portfolios and what we saw in the market this week, what we see coming up. And today we're also going to talk a bit about Apple's big announcement and our outlook on that, because I think it's a bit of a game changer. Worth sticking around to the end of the video to hear a bit more about that. But with that, as always, remember everything we talk about on these videos is for information purposes only. Always contact us or do your own due diligence before enacting any strategy in your portfolios to make sure it's appropriate for you. But with that, let's jump into what we saw this week. Pretty quiet week in the markets. We saw the U.S. still continue to rally a little bit on the tech names. We're going to talk about Apple in particular, kind of as that continues to play out. And of course, we had the Bank of Canada rate, not so much a surprise cut, a little bit earlier, I think, than the general market expected, but it's pretty absorbed across the board in the markets as expected. Nothing in it as far as a big shakeup. We did see the TSX down slightly this week, but nothing overly unexpected on that front, and it really wasn't across the board. There are a lot of sectors that continue to move along pretty gracefully. We are looking for numbers on Friday for the weekly jobless claims and inventory numbers for April. Haven't seen those yet, but we'll really watching those jobless numbers. As we've said for the last 6 months or so, that's the big number we have to watch here as we come out of this inflationary rise in interest rate numbers. Is we need the unemployment numbers to increase, because until then we really haven't kind of gotten out of that inflation fear or that recession fear, and there's no way that the central banks in Canada or around the world can really say that inflation is not going to rear its ugly head or continue to with strength until we start to see higher unemployment numbers. So that's a big number we continue to watch as things move along here. As I mentioned, Canada raised their rates 25 basis points. So now the big look is looking down at the US, whether they're going to follow suit. Canada has paused the last two while the US has done extra raises. So there's a chance they could leave it alone. Right now, statistics or surveys are showing the sentiment is about 68% of the analysts think that the U.S. Fed will leave interest rates where they are for the next meeting on June 14th. But we'll have to wait and see. The market does have another rate hike priced in, so not a big concern. But like Canada, is it going to be sooner or later that we see that rate hike? So we're going to keep an eye on that. The U.S. dollar did hold in to its recent gains, mostly on that speculation that the U.S. Fed could match Canada's rates. A rate hike and move that along. So things are still cautious as far as the US or the currencies go. On the energy front, oil edged slightly higher in Europe. We saw some gains earlier in the week as well. Just on last weekend's OPEC meeting committed to do some cuts in Saudi Arabia and hold the prices in there. So that sentiment continues to hold and probably will for the next little while. On the metal front, precious metals were pretty mixed, but flat over the week. The gold outlook, the near-term upside is kind of capped as we figure out this next interest rate move. So there's a bit of a ceiling on that, but the longer-term macro outlook is still strong. Looking at hopefully a gold number of north of 2,200. Right now it's kind of in a range between 1900 and 2100. For the next short term anyway, as we get through the interest rate hikes. Some of the headlines out there: Google's really putting stricter moves on employees to get back in the office, and we're seeing this across the board. A lot of companies are moving more and more to bring people back in the office. Obviously, we've seen a lot of pushback on that, especially in skilled labor. It's tough to hire people and train people. So there is some pushback from employees, especially in the tech industry, but we're starting to see more and more companies push that forward. So it's going to be interesting to see how that plays out for corporations, not just from a culture standpoint, but also a cost standpoint and a labor shortage standpoint. We're also seeing changes potentially to the recycling and regulations It's a big hot issue from the U.S. suitable marketing guidelines, and some companies are starting to take more and more closer and closer look at the labeling guidelines and what they're putting on their labels as far as recycling goes. We've done a whole video on this. It's kind of maddening from a personal standpoint, a little bit peeve that, we have all these recycling programs, but the material you're actually putting in those recycle box, not a lot of it's getting recycled, especially in the plastic front. A lot of countries, cities, and districts either don't have the capability to recycle a lot of the stuff you're putting in your recycle box, or certainly don't have the capacity to do it. So, and some of it's driven by cost, some of it's driven just by ability. But I think if you go back and watch our video on recycling, or you take a deep dive into it, you'd be surprised as to how much of what you put in recycling doesn't get to the landfill. So there's a lot of attention on those guidelines and what that means for producers when they're making their products, what is actually recyclable and what those codes are going to be going forward, and whether we see some tightening on that. On economic front, Japan's economy grew faster than expected, being the world's third largest economy behind the US and China. It grew by 2.7%, which quite a bit ahead of the 1.6% expected. So good news on that front as we start to see their economy start to take off, even during the pressures we're seeing around the world. And we could also be a talent shortage in the mining industry. So one of the things we're keeping an eye on is basically a shortage of labor for the mining industry when it comes to on that skilled side, really looking at potentially driving up those metal prices as it costs more and more to get out of the ground. And this is mostly be driven by the focus on shifting away from fossil fuels and moving towards the precious metals or the rare metals used in the electric vehicles or EVs, like lithium and others along those range. So more and more we're starting to see engineers and design job sites, miners that specialize in those metals, higher demand and more shortage. On the U.S. political front, of course, we have the debt ceiling issues solved, but the Republican insurgents have forced Kevin McCarthy, Speaker of the House, to cancel all upcoming votes, saying that he violated their January side agreements that enabled him to get voted as House Speaker, and they're pushing to force him to step down. What that's going to play out, internal politics in the Republican Party is only going to heat up more and more as we kind of get into the election. So overall, as I mentioned, kind of a quiet week in the markets, quiet things going on. Our outlook is still really strong. As I mentioned before, we're kind of at this tipping point of the two recessions outcomes, the soft landing or a hard landing. Honestly, I think hard landing is the better solution. As I mentioned, just pull the bandage off, quick V recovery, pull back and a V recovery, rather than this long higher interest rates. However, the long higher interest rates isn't that bad. It does give fixed income an opportunity to outperform potentially equities, and we have focused that in the portfolios. Locking in some really great returns on the fixed income side. We're starting to see the fixed income market stabilize a lot more. I think there's some great opportunities to position there. We're going to be talking about more of those in the coming weeks. So if we do have that soft landing or longer higher interest rate environment, the portfolios are well positioned for that. And the companies that we do have and we have been positioned in the portfolios are also well suited with higher cash flows and strong dividend yields to go through a longer high interest rate market or a sharp recovery, as cash flow tends to be king during those periods, and it's very protective on the downside volatility. So overall, no matter kind of which path we're heading down, we're very comfortable with where the portfolios are, and looking forward to an opportunity to either continue to take advantage of the fixed income side, or add to the opportunities on the equity side of things. So now with that, I want to turn over to the side topic. I mentioned Apple announcing new product, their headset, their AR VR headset. Now I know VR headsets have been out for a long time and isn't any kind of news whatsoever. And I think the biggest thing people are talking about around this Apple announcement is the price. Of course, Apple coming out saying about $3,500 US, so about 5,000 Canadian for one of these things. But that falls into Apple's business model, coming out with a product, a very innovative product. We're going to talk a little bit about it, but coming out early, higher priced, bringing on those early adopters, really a platform for developers. There's an app store in this thing where you can run apps. You can run your Mac computers off of it. It can be run a standalone. It can link to your computer, and you can run it virtually. So a lot of innovation, and just like they did with the phones when they first came out, they were the first to have that app store. They were first to bring in the developers to build a bunch of new apps, get an older generation. This is not a gaming device. All the other VRs have been very focused on gaming. This is definitely an application for users, for people who are working on computers, people who are doing design, people who are on the road. Really leads into that, virtual office or virtual meeting kind of environment. And by bringing in the early adopters at the higher price, and then later on, one or two generations down the road, start to bring on more of the mass people at a more competitive price, as other people, just like with the phones, start to copy that platform or start to copy that model once it starts to take off. Because when you look at this, if you go look at the videos that they've put out on these things, one of the big things, it's not just VR, it's AR, which means you can have them on and still see everything in your environment. So you can be at your home desk or your desk at the office. You'll still be able to see your desk, your pen, everything around you. You'll be able to interact with other people, but at the same time, your little laptop, you can have a big, huge monitor in your view. You can access your virtual keyboard. You can have multiple windows open, just like if you have multiple monitors on a desktop computer. You can have all those open at the same time. You can open apps with your hand motions. You don't have to have controllers in your hand. The technology that's built into this thing is pretty amazing if you dive into it. Some of the camera, never mind the camera technology for your view, but the camera technology on the outside that allows all this interaction, allows people without being encumbered, basically just like you would on your phone, tap on icons, open different applications, type, work, and do everything that you normally do on your computer, but do it in this virtual AR, so augmented reality, meaning you see things kind of in your vision, but you also see your normal environment. So you're not stumbling around walking into things like AR would, or sorry, VR would. It's not focused on gaming at all. It does offer like virtual meetings because it is, remember, this is an Apple product. It's built into all their features. So it builds into things like FaceTime, where you can have multiple people FaceTiming at once. You can see them, but as opposed to now when you're on your phone and they can't see, what's around, it's just kind of this one little view. It's, it's that real kind of in-person experience. And one of the other big thing they built into, and this one's a little controversial, is what people see for you is actually you. It takes a picture of you, a 3D model of you, but computer generates it on their screen, and that avatar reacts to what you're doing, what you're saying, and it reacts in the meeting. So rather than having kind of the comic or the animated version one that say Facebook was working on, they've kind of built in this real thing. So which might be a little bit creepy because it is computer generated, but I think a big step forward from where Facebook was looking at that technology. The other big feature for people is when you have videos, say videos of your kids playing and they're growing up, you can put it on and it's immersive. It puts you into the video. You can look around and kind of remember those times. So it's going to be an interesting technology. It's still very, very early stage. Obviously, the market liked the announcement. Apple's stock price taken off quite a bit along with this 2023 tech rally. So the stock price went over 180. So we're starting to see a lot of strength in the Apple stock price. So it's going to be something to watch. It's not coming out until 2024, January 2024. But I think that was, again, smart. They've timed it to allow the developers to start to build more and more apps that work with this technology. It's a whole new iOS platform or operating platform. So the developers are going to have to make new apps or redesign the apps to work in them. So they've given them time for that. So again, I think they've done a good job from that standpoint. And as I mentioned, where I see this product really fitting in, all the other gaming ones, or the ones that have been focused around gaming, have really gone for the youth, which they've had to be cheaper. They had to be more cost effective because younger people don't have the money or the money to allocate to gaming. Whereas this is going to be kind of, your older crowd, people who want to communicate, people who want to work from home, people who want to have more virtual meetings, but not be in that VR kind of fake environment. This AR aspect to it, I think, is going to be really impressive. So something to keep an eye on as we get more information on the product and more development happens. We'll keep talking about it, but I just want to touch on it because I thought it was something of note. And we do have Apple in the portfolio, and it continues to perform quite well in there, especially with this latest announcement. That's all I have for you this week. But as always, reach out to us at mikeonmoney.com with any questions, any ideas, any information that you're looking for. Happy to connect with you. Join us again next week. Keep in mind, at the end of this month, end of June, we're going to do a special feature on AI technology and what it means for investing and everyday life. Not just investing in the AI jet GPTs, but how it's going to affect your overall investing portfolio as more and more companies jump on and start to look how they can implement this technology either really well into their products and into their operations, or poorly, because we're seeing a lot of missteps along the way. So with that, have yourself a great weekend. We'll talk to you again next week. Thanks, everyone. Bye now.